Hello students. Today I'll begin with the second chapter of Financial Accounting 1, that is Accounting for Professionals. Now accounting for professional. Now who are the professionals? Professionals like doctors, lawyers, chartered accountant, architect, they are called as a professionals. They are expert in their field, and they undertake certain services, charge certain fees. They are called as professionals. Now these professional has to maintain their accounts. For example, doctors, they have their own clinics wherein they will charge, they will check the patient, they will provide medicines to them, they will charge the fees for them. For that account they should maintain the account of the medicines, dispensaries, salary to the staff, rent, etc. So all these accounts are maintained. Expenses, the record of expenses and the record of incomes are to be maintained. Now for these there are separate. Now how to record those transactions in the books of account, especially of professionals. So here in this chapter we are going to study as of how the professionals record their transactions in the books of accounts, that is accounting for professionals. Let us see the common meaning of the chapter or of the lesson accounting for professionals. Professionals like men's like doctors, lawyers, chartered accountant, and architect, etc., earn their income in the form of fees received or charges received by rendering services. They prefer to keep their accounts on cash receipt basis. They record the transaction for the following purposes. See, they record the transactions on cash basis. What is the cash received? They record, not the accrual. Outstanding, they don't record. Okay, they record only the cash received and cash paid during the year. Now what is the purpose of recording the business transactions? What is the need of recording the transactions in the books of account? First is to record all the items of income and expenses correctly. To record all the items of expenses and income, whatever the income and expenses they have incurred and income they have received, it has to be recorded correctly. Next, to ascertain their net professional income for a given period. To know the net professional income for a given period, it is necessary that separate accounts should be maintained for private and professional income and expenditure. So for preparing the professional income statement, they have to prepare a separate account should be maintained for private professionals and income. In other words, to know the net income, what is the surplus profit, what is the expenses, what is the total profit or loss, it has to be maintained, or uh, it has to be recorded. For that purpose the accounts for professional is done. Next, to keep the record of professional income and expenditure, the account may be kept as follows. The account may be kept as follows. They are a cash book, stock register, income and expenditure account, and balance sheet. These are the four books or records they have to maintain to show the accounts or to record the expenses and income in the books of account. Okay, income and expenditure and balance sheet is usually prepared. This for cash book and stock register is prepared when it is a need to know the cash balance and to know the stock. It will be prepared like a working note. But income and expenditure account and the balance sheet will be prepared under the accounting for professionals. Okay, see, now let us see the one of the important concept or the note in this professional for accounting. So I have highlighted it. They are accounting for professional. For preparing for maintaining the accounts of a professionals, you keep into account, remember we have to prepare two accounts, that is income and expenditure account and balance sheet. Next is a note, while preparing the income and expenditure account, the outstanding income is added to the concerned income on the credit side, and a provision of or reserve is maintained for such outstanding income. See, whenever in the professional accounting, it is only the cash basis are recorded. So if there is any outstanding income, outstanding income. You know what is outstanding income? Outstanding means you have not received but you will receive in the future. Okay, that is called as outstanding. Now when it is outstanding income, we write in the income side of the income and expenditure account, whatever the income, this add outstanding income, and the total amount we write in the outer column. Same here also in the professional accounting also, if there is any outstanding income, you have to record that in the income and expenditure account and show the total in the outer column. But at the same time you have to create a reserve of that outstanding amount. For example, if there is an outstanding income of rupees 4,000, so you write in the income side add outstanding income 4,000, and the same expenditure side you have to show the reserve. So to the debit side or to the expenditure side you have to write the reserve for outstanding income, same amount 4,000. First you will add to the income side, then the same amount you will show a reserve, that is on the expenditure side. Okay, then the same amount you will show in the balance sheet asset side, outstanding income. We show usually outstanding income is showed on the asset side of the balance sheet, and you have to write outstanding income 4,000 less reserve 4,000, so the difference is nothing but nil. Okay, so this one thing you have to remember while preparing the professional accounts. Other things are same as we do the accounts, all the expenses and expenditure. Now I'll repeat here once again. When there is a outstanding income, you have to add that outstanding income on the income side of the income and expenditure account. Then on the expenditure side you have to show the reserve, to reserve of outstanding income, same amount. Again come to the balance sheet, in the asset side write down outstanding income 4,000 example less reserve 4,000, the balance is nil, so outer column nil. While doing the problem I will explain you again, but for you remember this note while preparing the accounting for professionals. Okay, I'll go through the first problem under the accounting for professionals. I'll read the problem here. Dr. Roshan commenced practice in January 2018. He prepared the following receipt and payment account for the year 2018. Receipt and payment account. Receipt is nothing but income, expenditure is payment. So receipt we write in the debit side. Cash introduced, that is capital of a company, 30,000. Receipt from dispensing, this is a doctor, so dispensing entry, this will be there, 29,000. 2 visits, 40,000. Miscellaneous receipts, 1,000. These are the income of the doctor. Then these are the expenses. Expenses is nothing but here equipment, they have purchased asset here 20,000, furniture 5,000, drugs 10,000. This is the expenses, 10,000 drugs expenses, assistant salary expenses 6,000, rent 5,000, conveyance 3,000, stationery 600, lightning 700, journals 900, drawings 28,000, balance carry down 20,800. So the total is 1 lakh. Other adjustment, rupees 4,000 was still outstanding on account of visits. 4,000 is still outstanding. Outstanding is yet to pay 4,000. Assistant salary still payable is rupees 600, that is outstanding salary rupees 600. Stock of drugs on hand was estimated to be rupees 2,000. Stock is nothing but remaining is rupees 2,000. Furniture and equipment are subject to a depreciation of 10%. This is the expenses depreciation. 50% of the conveyance is for domestic purpose. Domestic purpose, they have used 50% of the amount of conveyance. Prepare the final accounts of Dr. Roshan for the year 2018. So final accounts of Dr. Roshan has to be prepared. When it is doctor, you can understand it is a professional account. So when it is professional account, we have to prepare here two accounts, that is income and expenditure account and sheet balance sheet of Mr. or Dr. Roshan. Okay. Now let us go to the solution of income and expenditure account. Here, while preparing the solution, um, you have to write here income and expenditure account for the year ending 31st December 2018. See here in the last line it is given, it is the year 2018. So here income and expenditure account for the year ending 31st December 2018. Now here income and expenditure account, so here you can write here income, this is income, and this is expenditure, this is expenditure side, and this is income side. I'll repeat again, this is expenditure side and this is income side. Now expenditure side, you will write all the expenses, that is this is a expenditure side is here credit, income side is a debit. Now first we will see expenditure side. First one is equipment. You will write only the expenses, not the asset. Equipment is a asset, equipment comes under asset, so asset is purchased here, it is not an expenses, it is an expenses, it will come directly to the balance sheet, not to the income and expenditure account. So equipment will not write in the income and expenditure account. Next is furniture. Furniture also is an asset, so it is not recorded in the income and expenditure account, it is recorded in the balance sheet. Next is drugs. Drugs is nothing but the medicines. Okay, so medicine is an expenses, every day they expend for expenses medicine, so these medicine expenses we have to show in the solution. So I have written here, see, two drugs, it is a expenses, so we write in the debit side two drugs. Now what is the amount of drugs? You see here 10,000, so I have come here and two drugs 10,000. Next, if you see, is there any adjustment for drugs? So you go through here, stock of drugs on hand estimated to be rupees 2,000. Stock means it is remaining. Okay, 2,000 cost of drugs is remaining in the business. So if there is any stock remaining means it will be continued in the next year. So if there is a stock, we have to deduct that stock. Okay, so come to the solution. Less closing stock of drugs, the amount of stock remaining is 2,000. So closing stock of drugs 2,000. 10,000 minus 2,000, it is 8,000. Okay, next we will go to the next one. After drugs, assistant salary, that is also an expenses. So come here, write down assistant salary 6,000. Then adjustment, see the adjustment here, assistant salary still payable rupees 600. Still payable means outstanding, outstanding is rupees 600. So come here, add outstanding salary 600, 6,000 plus 600, it is 6,600. So total salary if there is any outstanding expenses, we have to add that outstanding expenses. If there is an outstanding income also, we have to add. So outstanding salary 600, to total it is 6,600. Next, rent. So rent is an expense, so show here to rent 5,000. There is no adjustment for rent. If you read, if there is no adjustment, you directly write in the outer column 5,000. Next, to conveyance. Conveyance is there. Conveyance is nothing but traveling charges from here to there. So doctor will be traveling from one place to another. Okay, from one clinic to another clinic, so they will be expending something, so that is 3,000. So you have to write here conveyance charges 3,000. Then you check, is there any adjustment for conveyance? Yes, there is an adjustment here. See, 50% of the conveyance is for domestic purpose. Domestic purpose means what? What is the meaning of domestic? Domestic is for own purpose. It is not for his clinic, is not for his professional. It is for his own use. He has to spend 50% of the amount. If it is own use, we call it as a personal expenses. So personal expenses we should not show in the account. So 50% of the amount we have to deduct from the conveyance. So come here, conveyance less domestic use 50%, 3000 into 50%, it is 1500. Half of 3000, that is 1500. So 3000 minus 1500, outer column 1500. Next, stationery 600. So go here and write stationery 600. No adjustment for stationery. Next, lighting also write lighting 700. Next, to journals 900. So write here journals 900. Next, drawings will not come. Okay, drawings is a balance sheet item, it will not come, it will come in the balance sheet. Okay, next, balance carried down will not come. Okay, it is a cash balance, it comes in the balance sheet. Only the expenses we have to record. So we have recorded here, we have not recorded equipment and furniture because both are assets. Then remaining all we have recorded. If there is outstanding we have added it. Then if there is any personal use we have deducted. Stock if it is there then we have deducted. Okay, so till here journals 900 we have written. Okay, now next we will go to the income side of the receipt and payment. This is cash introduced. This is a capital. So capital comes in the balance sheet, not here. Receipt from dispensing, that is dispensing is nothing but the charges they charge doctors. So that is an income. So come here, receipt from dispensing 29,000. Next, two visits, the patient will come for visit. So two visits 40,000. So come here, by visits 40,000. Then see the adjustment. Is there any adjustment for visits? Yeah, rupees 4,000 was still outstanding on account of visits. Outstanding is there, that this is outstanding income. Okay, so I have told you when there is an outstanding income you have to add that outstanding income to the concerned income. So you write here, add outstanding visit 4,000. So 40 plus 4, 44,000. Now when there is an outstanding income you have to add that to the concerned income. What I have done here is I have added and written 45,000. Now same reserves we have to create in the opposite side. When we come to the opposite side is this side. So you have to write to reserve for outstanding visit 4,000. Okay, so once you have to add here, it is only for income, you have to add here outstanding income visit 4,000. The same you have to write in the opposite side, reserves for outstanding, the same 4,000. Okay, immediately you have to cancel that amount. Next, miscellaneous receipts. So here come, by miscellaneous receipts 1,000. Okay, so this is what the adjustment which I have told you. Outstanding income, not expenses. Expenses you will write add and nothing will be reserves. Only the income you have to add, and opposite side you have to show the reserve of the same amount. Okay, next miscellaneous receipts you have to show here, miscellaneous receipt. Then you see the adjustment, anything is pending. 4,000 was still account is outstanding, it is added here, outstanding income over. Assistant salary was payable, added, it's over. Stock of drugs on hand was estimated to be 2,000, that is also deducted. Furniture and equipment are subject to depreciation. So depreciation is an expenses, so it has to be shown in the income and expenditure account. To depreciation, equipment amount, total amount is 20,000. So the receipt and payment account 20,000 into 10%, so it is 20,000 into 10%, 2,000. Furniture total amount 5,000, 5,000 into 10%, it is 500. So total depreciation 2,000 plus 500, 2,500. Now everything is over here, adjustment also. Now total of the credit side, you have to check which side is more. So if you total, the credit side is more, 74,000. Then deduct all the expenses, that there will be a difference. The difference is called as excess of income over expenditure, that is surplus. excess of income over expenditure 44,200. So that is the difference. Then total is 74,000. If you get here difference, then excess of expenditure over income. Here this side is difference, excess of income over expenditure, so 44,200. Next we have to prepare balance sheet. Balance sheet as on 31st to 12 2018. Liabilities rupees, assets rupees. Okay, so we'll write first assets, then go to the liability. Assets, first cash in hand. Cash in hand, you have to see the balance carried down. Balance carried down 20,800. So the cash in hand 20,800. Then this will always be there. First you have to write the cash. What is the cash? Is balance carried down. Balance carried down in the receipt and payment is a cash balance, that is 20,800. Then go to the expenses side, the side, credit side, and see is there any assets. So assets we have two that we have to show now. Equipment 20,000. If there is any depreciation you have to deduct. So equipment 20,000 less depreciation 2,000, already calculated. 20 minus 2, 18,000. Next, furniture 5,000, we have depreciation 10%. So 5,000 minus 10% depreciation 500, 4,500. Next, all the assets are over here. Only two assets that is written. Okay, drawings comes in the liability side. So now is there any stock remaining? Stock, if there is any stock remaining, that is an asset. So stock of drugs in hand is there 2,000. So asset side, stock of drugs 2,000. Next, outstanding visit. So I have told you, if there is any outstanding income, see here you have added outstanding visit. So outstanding visit you will add here, the same reserves you will show here. In the balance sheet you will write outstanding visit again, income, that is 4,000 less reserve for outstanding visit 4,000, same reserve you will show. 4,000 cancel, the balance is nil. The balance will always be nil, but you have to show here outstanding visit and less reserve for outstanding visit 4,000, same amount, then nil. Then come to the liability side. Liability side, is there any outstanding expenses? Outstanding expenses, if it is there, then you have to show outstanding visit, that is income, that is written. Outstanding expenses is there 600. Assistant salary outstanding, so that outstanding salary 600. Then capital is nothing but introduced, cash introduced 30,000. So capital 30,000. Add surplus is nothing but the difference of income and expenditure account 44,200. So 30,000 plus 44,200, 74,200. Less drawings, if there is any drawings you have to deduct. So drawings is there 28,000, so less drawings 28,000. Then conveyance is also for domestic use, personal use, that is also you have to deduct. So here conveyance charges is 1,500. Here you have calculated, see, conveyance domestic use 50%, 1,500. So that you have to deduct here. These both are personal use. Drawings is personal and conveyance 50% is personal. So that 50% you have taken here 1,500. 74,200 minus 28,000 and 1,500, 44,700. Okay, over. Now total both the side it should be same. So 45,300 and 45,300. Okay, in the balance sheet you have to record first cash in hand, that is balance carried down. Then write all the assets. Then if there is outstanding income, show it. Then same reserves you show, same amount, cancel it and write a nil. Then here outstanding expenses, then capital, surplus, drawings, then total you will get the balance sheet. This is how you have to prepare accounting for professionals. If you have any doubts in the problems, in any of the adjustment, any problem, you can clarify with me personally. You can put up the question personally. Okay, so these today I will do only the first problem. From next recorded slide I will send you the remaining problems under accounting for professionals. Your first chapter is completed, so I want you to complete your notes. Your first chapter should be complete. You should write in the your accounting notes. Your first chapter should complete. Okay, and second chapter onwards there will be a problems. Thank you.